Let's look at a uranium ETF. First off, read this disclaimer carefully. Okay, uranium is something we can find over here. It's in the natural resources. And here we have it, uranium. You could categorize it as green energy. When it works, 69% from the 52-week low, literally at 52-week highs. That's good. Let's look a bit at the seasonality of Ttf. Okay, so you can see here that July is actually 60% of the time a strong month, with an average gain of 1.3%. August is actually quite weak though. Only 22% of the time it's closing higher than it opened. So we are, on the horizon we do have a weak season, but that also could be, an entry opportunity. Let's compare it against the SPY, the S&P 500. Let's now look at the big picture, and you can see here that it does underperform the S&P 500 quite significantly heading into, the autumn season. But then there's some very significant outperformance into the later part of the year. Okay, so let's get the big super picture here for uranium, weekly data points. Here you have the high, and then you have what looks like a monster mini-year rounding bottom. Bears dominating more, and here the battle is getting more and more even. It is true that we did recently have the ultimate low here for uranium, then we do have a V-shaped recovery. The interesting thing is that for the first time here since 2018, we have been able to close above the red 100-week moving average. That happened this week. That is a breakout. If we are able to use this moving average as a support level, then it becomes quite interesting. Because if you look at the prior breakouts, like here, here, and here, we were not able to use it as a support level. We lost it, so it was like this fake breakout. So definitively watch out for that, because then you could have, especially with the weaker seasonality here heading into the autumn season. If you do see a pullback, but then we don't break that support level, then that could signal a very nice long-term entry opportunity here for uranium. Because there has been a trend shift, bears dominating to much more even battle. So it looks interesting. RSI is 61, seeing a bit of a rise, but the RSI is corroborating the recent rally. If you look at the accumulation distribution line, we are seeing that from this low here there is a decent uptrend, so there are buyers stepping up here. I wish there were a little bit more, but still, yeah, it's still a speculative play. The correlation with S&P 500 is minus 43% negative. That's interesting as far as making a diversified portfolio. So here are the daily data points. The interesting thing here is that we are above the 200-day moving average in red, and it is starting to turn positive. So all in all, this looks quite interesting from a long-term picture here for uranium. Okay, so let's get a bit more data. Options are available, that's a strategy. It is shortable as well. Here you can see some performance data, 6% year to date, that's decent. If you look a bit here at the ETF, it's from Global X, expense ratio 0.70% if you round up. As far as dividend and valuation, so the PE is 15. This is the this is the robotics and AI, I think. Yeah, much higher, but not really comparable. What is filled? Let's look at what that is. Filled is Cambria foreign shareholder yield. Okay, not sad about that one. Here you can see the dividend, 2%, that's a decent dividend. Pause, that's actually the pet industry ETF. SDiv, 11.5% dividend, that's pretty good. SDiv, that's the super dividend ETF. But they are not really comparable, they are just in completely different businesses. So uranium, 2%, it's a decent dividend, it's not like super big, but it's something that you're being paid a bit to hold, if you have like a long-term outlook. Okay, let's look a bit at the fund flows, 6 months. There's been some selling, If you look here at the holdings, you get Cameco. We have looked at that company before. It's basically a bunch of these uranium companies. Barrick Gold. Yeah, I mean, some of these are not really pure plays. That's a bit of a problem. Sector breakdown. Market cap. A bunch of large and mid caps. Regional breakdown. North America, 40-ish%, then Asia and Asia Pacific. There is market tier, 79% developed markets. Yeah, I mean, the thing is that uranium, it's a very interesting kind of energy. When uranium energy works, it works really well. But the problem is that it's very much, you know, like Jekyll and Mr. Hyde. When it goes bad, it goes super bad. But I do like this pattern. This looks very much like a monster rounding bottom pattern. There are some resistance levels that we should clear before it becomes a bit of a screaming buy. But then again, it's about buying low and selling high. This is a key breakout. It is interesting, but definitively consider this to be highly speculative bullish opportunity. And we did see the seasonality that suggests that maybe wait a bit to buy. Okay. Now let's look here at some other charts. Microsoft. Of course, remember, you know, to like, subscribe, share, and comment, because that creates all kinds of fantastic opportunities for the channel and you as a subscriber. Okay, Microsoft seen a ridiculous rally. We are seeing some pullback finally. There's been some meaningful pullbacks in the past. It's been quite normal for Microsoft to have them. We were overbought. We did have a bearish divergence on the RSI. I wouldn't be surprised to see a bit more pullback, maybe to the 20-week moving average in purple, which, like, historically it's been a very frequently used support level. Definitively very strong times for Microsoft. So Microsoft, they are behind the Xbox gaming console. They are coming out with a new one, the Xbox Series X, which seems to be basically like a chain of gaming consoles. That is coming this year. Microsoft, it's been able to build a strong position in the gaming industry. Many are saying, and I do agree, that it is a bit of a Trojan horse for Microsoft because they want the Xbox to become the operating system for home entertainment. That's like the big picture strategy. Microsoft is much bigger than their key competitor, which is Sony. And so here's the stock chart for Microsoft. Let's look at Sony. Sony Corp ADR. Well, not that bad. But Sony is a small company compared to Microsoft, anyway. The thing is that there is reason to suspect that Microsoft could make some power plays when it comes to the Xbox, so that's definitively something to keep on your radar. Because they have been in second place now definitively for this generation they are in a very clear second place. They don't like that, of course, they want to be in the first place. And I wouldn't be surprised if they make like some big power move, maybe some acquisitions, just something. Definitively something to watch out for. Well, I am a neutral force in this gaming console war. I own both the Xbox X and I also own the PlayStation 4. Hence, yeah, I am unbiased, but it's pretty clear to me that you get a better deal with Xbox. They have this thing called Game Pass, which is sort of like the Netflix of gaming, and you get some really good games for a very low monthly price. So they are aggressive, and I think they might become a bit more aggressive for the next gen. Okay, here is Carnival Core. Okay, one of the cruise lines. You can see that there are these major cycle patterns. During the contagion and lockdown, they were smashed. Then you have a major bounce, which was very tradable, but then you see a major pullback afterwards, and this shows you that you want to protect your gains. So from here to here you would have a 214% gain. That's good. But if you did not have any stop loss, trailing stop, or anything like that, and you just held on, then you would have a 96% gain, 97-ish. It's better, of course, to have more than double. So let the trend be your friend. So then the question, okay, what's my current take here on Carnival Core? We have broken through many support levels. A lot of very bad news are priced into this company. You could make a contrarian case. The bears are currently in control, though. That's the issue. You've seen a massive pullback. Hence, I would like to see the buyers actually step back into the game a bit before I turn bullish on Carnival Core. Because it is a bit difficult for the market to really price in the full ramification of what happened. Especially given that there's talk about a second wave. The cruise ship business is sort of like, from the perspective of a pandemic, it is a nightmare, because you are literally on an enclosed space, very enclosed space. I mean, you can't just jump off the boat and swim. Hence, as far as any kind of contagion, it's just a nightmare. It's a worst case scenario. So, I mean, it's one of the businesses that, it probably is the business that is worst for a contagion, most affected. And that's a major issue, because the C virus, it is very persistent. We are seeing increasing numbers. The mortality rate is not, rising rapidly, and that's of course good. We are seeing that stabilize and slow down in many places. The problem is that it's still around, even though it is hot out there. Let's look at BA, which is Boeing, I think, yes. One of the funny things that happens when you look at a lot of charts is that you start to memorize the tickers. Okay, so what's my take here on Boeing? Okay, Boeing massively affected by the lockdown. But we are seeing that, okay, there was this bounce, but here the bears are, they are, bleeding the stock a bit. Boeing is in a very different situation than Carnival, because Boeing, they make all kinds of flying vehicles. It's not simply like airplanes. They're into the chopper business. They are into space as well. Hence, Boeing is a company that is going to be around. So it's almost impossible to imagine a situation where Boeing just goes bankrupt. It simply is too big to fail. So it's going to be around. The issue is that, okay, when do you buy Boeing? Sort of similar to Carnival, I would like to see the buyers actually, step in here to show that there is some that there are buyers. If you look here at the accumulation distribution line, we are not seeing a tick up yet. So there is quite meaningful numbers of sellers. But Boeing is one of those stocks, that's been very affected by a surprise event. Hence, there will be a very good buying opportunity on the horizon for Boeing. So it definitively, it makes more sense at this point to have Boeing on your buy radar than on your short selling radar. Okay. Whatever you do, of course, don't fight the trend, and may the trend be with you.